You are, it seems, a man of many skills. A rare combination.
Approximately, how much do you make a week?
Alrighty, what's poppin', guys? So, I want to start off this year showing you guys the very most basics on how to identify trends in the market. This alone, you add this to your game, and I could almost guarantee you that you can make money in the markets. Literally by following this principle, identifying trends. So let's get into it. We've got uptrend, downtrend, and equilibrium. Now, what are these? It's very simple. This is the most basic thing you need to know, in my opinion, before you deep dive in the markets. Because otherwise, if you can't identify a trend, then you're completely going off a whim. And that is more so gambling than making a decision based off previous price action. So we'll get into it. An uptrend is basically a stock that continues to make higher highs and higher lows. So this is an example of an uptrend. It starts at a low point, it makes a high, and then it comes back and it makes a higher low. When I say higher low, what I mean by that is simply it's the point that it's drawing down to or pulling back to is higher than the previous low point. That's all I mean when I say higher low. And then when I say higher high, that means the current high point is higher than the previous high that it made. So as you can see, if a stock continues to make higher highs and higher lows, it will be an uptrend, right? So next we'll go into the downtrend. A downtrend is pretty much the opposite, where instead of making higher highs and higher lows, it continuously makes lower lows and lower highs. So right off the hop, if you can look at this, for example, say you buy on this pullback of an uptrend right over here in this area, if you could see my mouse. If you buy here, you're Gucci because the stock's going to continue going up, right? You might have bought in the middle right here and it'll go down a little bit, but you're saved because of the overall uptrend that the stock is in. So that's why you want to start off investing in uptrends, and you want to continuously invest in uptrends because you're more likely to have momentum on your side, which is definitely something you want when you're putting money in the markets. Now, a downtrend, for example, if you see a stock going down and then it starts to rise and you buy here, well, you're in big trouble now because it's going to continue going down and it's not going to break upwards to get back to that level. So you're going to continuously be losing money. And I'm going to show you guys an example of downtrends after we finish this little slide here. And an equilibrium is essentially sideways trading. Now, I put two little diagrams of what equilibrium could look like because it's essentially like sideways trading. Like it could come in the form of getting tighter and tighter, which is, I think, healthy. Or it could come into a range where it's stuck in a range between, for example, $100 and $80, and then it stays bouncing between that range. That's what you call an equilibrium trend. So these are the three basic trends. If you can identify these in the market, you will be able to know, okay, this stock, maybe not so much for me right now. It's in a downtrend. And now keep in mind, uptrends, downtrends, equilibriums, this could all happen no matter what the time frame is. It could be 15-minute time frame. It could be a daily time frame. It could be weekly, monthly. It could be 2 hours. It doesn't matter what the time frame is. Whatever the candlesticks are forming, that's how you go by it. So it could be any sort of time frame. If you're looking at an hourly downtrend, then you probably want to, if you're looking at an hourly uptrend, then you have to take into consideration that trade that you're making is going to most likely going to be on an hourly basis. If you're looking at a daily time frame and you've noticed a large uptrend in a daily time frame or a weekly time frame, that's going to show you that there's a lot more conviction and a lot more people and money in that uptrend. So those are just little things that I feel like is important to know before you really deep dive and get into like individual stocks. So we'll start off with a few examples here. Now, this is the copper futures. I just tried to find 3 random stocks that can basically show you all different types of trends. So, for example, here, this is the copper futures, and from January 2011 to October 2016, it's been in a continuous downtrend. Now, why though? Like, why is this in a downtrend? Some people might ask. Well, it's evidently not going up. And 2, I tried to pinpoint here, it made a high, a low, but then it made a lower high than the previous one. And the thing with downtrends is that they continuously make lower highs. Now, as you can see, your window to make money in a downtrend is a lot smaller than it is in an uptrend, right? You only have so much time. You got to be really accurate, which is why it's a lot more difficult and risky to invest in a downtrend. Buying pullbacks and like all that stuff in a downtrend is a lot more difficult. You're better off to just stick with an uptrend. Like, you have momentum on your side in an uptrend. So an example of an uptrending stock is like Tesla's a great example. We'll look at it on a weekly time frame, right? Like, if we look at this on a weekly time frame, this is dating back to July 2019, but like if you look the past since October 2019, it's been in a large uptrend, very large uptrend. And as you can see, it just continually makes higher highs and higher lows. Higher high, higher low, higher high, higher low. And then it goes through a little phase of equilibrium. See, like, this is so healthy. Like, this is what you want to see in stocks. Now, Tesla is a lot more volatile, right? So you got to take into consideration this thing moves a lot faster than other stocks. If you were to look at another uptrend, for example, Visa. Now, Visa's been in an uptrend, and it's a strong uptrend. Like, this is probably the most safe bet you can make in the market, right? Like, ever since its inception, it's gone up. Even after the pandemic hit, right? It drew down over 30%, and then it gained right back. I would consider this little area here equilibrium. So, in my opinion, think about making an investment, right? If you want your money to work for you, you want to think the time frame. Okay, well, we're looking at this Visa stock, right? We're looking at the weekly time frame. It's on a weekly uptrend. Well, if you wanted to make an investment, I think it's safe to say that 100 weeks from now, this is going to be higher than this point. It's not guaranteed, but you have history of price to look back and say, okay, well, even after a big drawdown, it seems to make its way back up. I'm very bullish on Visa, and I like what's gonna. If you think about the future and everything that's being added with like credit cards, and like cash is gonna be eventually useless. It's all gonna be credit card taps and stuff like that. So Visa is a great example of an uptrend. It's a lot safer to invest in this than it is to invest in a downtrend. You see what I'm saying? Now, another example that I wanted to look at is Corsair Gaming. And now I really like this stock here because the way it's printing is a perfect example. This is, in my opinion, a very healthy stock. Now, it started off at a low point, and right off the hop, it started gaining momentum. It continuously made higher lows and higher highs. So what that is telling me is it's in an uptrend. So this was in an uptrend for a little while, but then it made a temporary top and it pulled back heavily. And after the pullback, the trend changed, right? So it started to make lower highs and lower lows. And then if you notice here, I'm going to take off all this gibberish here and kind of get you to see it from like a naked view. But if you look at it here, it's now in a very similar formation as this little equilibrium diagram that I posted up at the beginning, right? If you look here, it's getting tighter and tighter. It's not making higher highs, but it's not making lower lows. It's starting to form a wedge. It's simply starting to form a wedge pattern. Now, in my opinion, this is a very bullish pattern. Does it mean it's going to go up? Not necessarily. It could very well go back down and test these previous support levels, which is all a part of the game, right? All we're trying to do is identify opportunities. So what I want to see from this stock is I want to continuously see it get tighter and tighter, and then I want to see it eventually make a bullish break outside of this wedge, and then it's going to continue upward to test its previous highs, and the previous high being over here. Another thing I wanted to mention here is, for example, if we look at a 2 hourly time frame, just to zoom in a little bit, it could be very confusing because as you can see in this 2 hour time frame, it's a clear downtrend. But if you zoom out a little bit, like the entire stock is in an uptrend. So don't forget and don't psych yourself out here, because you got to be careful. Like, don't miss out on an opportunity because you see a 15-minute downtrend or an hour downtrend. But overall, the daily time frame or weekly time frame is in an uptrend. That's something you don't want to confuse because you'll miss out on opportunity. So don't look too much into the weeds. Maybe start off on a weekly time frame, then zoom into the daily, and then you could zoom in a little bit further. Where do you want to enter the trade? You know what I mean? I find that the weekly and daily time frames are really good for identifying stocks like that you want to participate in. Where you zoom in, like the 15-minute or 1 hour, is maybe where you want to find your entry. Maybe you want to find your entry point on an hourly time frame, because that'll help you get a closer look at where's a good spot. But don't trick yourself and fall for the trap of, oh, this is in a downtrend. I can't invest in this now. But then if you look at the daily time frame, it's in a massive uptrend. Like, that's something you really don't want to get caught doing, right? So just keep that in mind. Another cool thing you want to really start doing, especially once you start realizing trends, is, and I learned this from my mentor, Rick, shout out to Rick at Fit Traders, what you could do is you could start utilizing trends to get an understanding of your actual bank account, right? You want your bank account to be an uptrend. You want your account to go up. You don't want your account to be a downtrend. That's not good. So, for example, if your account, will say that this is $10,000 here and then this is $5,000, you have the mental wherewithal to choose, hey, I have $10,000. I want to put this $10,000 in a stock that's going to give me opportunity to go to an upside. Now, if you put it in a stock and it happens to be a bad play and your money goes down, well, you want to make sure that you don't lose enough money to break your higher low in your account, right? Start thinking of, like, where is the higher low in your account? That's a spot you don't want to break below because you're going to end up breaking the trend. So it's just a cool thing to keep in mind. Trends can apply both in stocks, but then once you get deep into it, apply it to your bank account and really focus on, because that's how I believe you focus on growth. If you understand, hey, okay, I only want to take this much drawdown. I'm going to be really picky when I'm choosing my next investment. So that is literally the basics of trends. Like, if you add this to your game, I promise you, right off the hop, you're at a significant advantage compared to some random who just goes, hey, did you hear about that stock? Think about this. The person who doesn't know how to identify a trend just buys into a stock. What happens if they bought in at the very top and then they look 4 days later and they lost 29% of their money? That's going to feel a little bit uneasy. You want to be able to put yourself in a position where you go, I see that this is making a large move to the upside. It is due for a pullback likely, because all healthy stocks need to make pullbacks. A stock can't continuously go up. That's very irrational. And if it did, everybody would be rich. So it's a good thing to be able to identify trends, because you're going to put yourself in a position to invest a lot safer. And I think that's very important, right? Like, I work hard for my money. Like, I go to work 40 hours a week and I love my job. With that being said, I still doesn't mean I want to just throw away my hard-earned money, right? I want to make a wise decision. I want to do my due diligence and find an opportunity where I think, am I getting this at a deal, or am I buying this at the very top? Is this stock continuously making lower highs? Like, what are the chances of me making money in a downtrend? It's a lot lower than an uptrend, right? So I just wanted to make this video because I feel like this is a simple strategy that you could add to your toolbox that will significantly increase your odds of making money in the market. So I hope that helped. And if it did help, give it a share. You know, my goal this year for 2021 is to help as many people as I possibly can learn about stocks and maybe make their first investment in the market, because I truly believe that everybody should know this stuff. Because although working, even if you are working in a field that you love, which I am, there's nothing better than making like a second income stream that could help you out, right? I want to be able to live a comfortable future and I want to have a comfortable life. And if this is going to help me do that, then why not, right? It's a little bit of research. That's all it takes. So I'm going to leave that with you guys. Cheers. I will see you in the coming week.